Greetings, members, one and all of the Salivation Nation. With a little update here on the markets. It's been quite a wild ride today as the trade war continues to rage on, with two big blows happening. First, President Donald Trump had imposed a 25% tariff on goods coming in from China, and now China has responded. Let's explore this article here on CNBC from Reuters. How gold has eyed its best day in 3 months as China hits back over U.S. tariffs. Gold prices climbed and were on track for the best day in nearly 3 months on Monday, as investors sought a safe haven from market turmoil triggered by China announcing that it will retaliate over levies imposed by the Trump administration. Spot climbed 1.1% to $12.99.30 per ounce after hitting $1,301.10, its highest since the 11th of April. The metal was on track to mark the biggest one-day percentage rise since February 19th. We'll take a look at the prices in real time here momentarily. U.S. gold futures settled 1.1% higher at $1,301.80 an ounce. We are seeing safe haven buying right now, with the breakdown in trade talks and China talking about retaliating, said Philip Streibel, senior commodity strategist at RJO Futures. Geopolitical risks are rising, trade tensions escalating, and the dollar is down and equities are really under pressure. All these factors are boosting gold prices right now. China said on Monday it would hike tariffs on a range of U.S. goods, striking back on its trade war with Washington shortly after U.S. President Donald Trump warned it not to retaliate. The move weighed on equity markets worldwide and pushed the U.S. longer-dated Treasury yields to 6-week lows. The dollar index also fell to over 3-week trough, making gold cheaper for holders of other currencies. The metal had earlier hit a session low of $1,281.35 an ounce as mounting trade concerns weighed on the yuan, denting demand in the world's biggest buyer of the metal, China. The Chinese currency dropped to its lowest level against the U.S. dollar since December. Gold had lagged early, but the Chinese tariff announcement put more pressure on equities futures, says Tai Wong, head of base and precious metals derivatives trading at BMO. So this is speculative buying based on lower stocks and lower yields, with a technical break on the upside adding momentum. We'll talk about that in a moment. On the investment side, speculators raised their net long position in gold in the week ended May 7th. And back to that statement, it's speculative buying. And when you hear the word speculation, you have to think about what that entails. Well, it's hedging your bets. And it's basically making moves based off of the emotional aspect of the market, the fear index, the volatility index. And so we saw the Dow go down 704 points, and then it recovered to dropping just below 600 points by the close of the business day. So meanwhile, holdings of SPDR, special drawing rights, Gold Trust, the world's largest gold-backed exchange-traded funds, fell 0.9% on Friday. Silver was up 0.1% at $14.77 an ounce. Platinum fell 1.5%, $847.90 an ounce, while palladium dropped 2.5% to $1,323.51 an ounce. We're going to look at those metals momentarily too in real time, because we're starting to see parity between gold and palladium again. Pretty amazing. Palladium will narrow its deficit in 2019 compared with last year, while platinum surplus is seen nearly doubling, said research group Metals Focus. The World Platinum Investment Council, however, said that a surge in investment demand has reduced expectations of a large surplus in the platinum market this year. So it looks like people are getting smart and picking up some platinum, myself included, although I don't know that I'm necessarily smart. But I think it's good to kind of grab a little bit just in case it does well in the future, and that's what I did kind of offsetting my gold goals for the year. So on that note, let's take a look here at the precious metal prices here. We can see these are coming to us from KitGo. Gold is up $13.80 right now. It's hovering just above the $1,300 mark. Silver's at $14.85. And we can see here its move was much less severe, only up 1 cent, 0.07%, while gold had an over 1% gain. Gold was the clear winner of all of the metals today, where platinum is down $10 to $858, and palladium is down $28, with the biggest loss at over -2% there. Rhodium hanging on there, $2,840, down $10 there. Very interesting indeed. So there that is. Now, as far as the trade war and what's going on there with China, you know, many people for the longest time have felt like that we've got a bad deal from China with regards to trade, and felt like we were being taken advantage of there. But no one's really had the guts to really do much about it, because they were concerned how that's going to affect the economies. And that is still a concern, obviously, right now. The problem is that this is a very delicate situation. We all believe, I think most in this community believe, that the economy is doing well, but it is fragile. And and since some of the Fed actions and the like that has been occurring. And so people like Ron Paul are very skittish and nervous about this, because essentially tariffs are taxes. And it's taxes on goods and services. Now, some of these larger businesses may elect to eat some of that loss to make less profit, but they can only do that so long before it comes back to us. And I think that's what Trump is hedging his bets on, that maybe some of these larger businesses will eat some of that, at least temporarily, because he's promised them that we're going to work something out, and eventually they got to give. China has a weaker economy than us, and so my guess is that Trump is hedging his bets that China will capitulate eventually, because they can't afford not to. They need our dollars, and we need their goods, really. And they've taken an advantage of us for quite a long time. And I think really in the end, Trump's negotiating and the administration is negotiating a way for them to take advantage of us less. In other words, they're still going to be relatively favorable, but China's never been challenged like this before. And so I think there's a lot of calling the bluff, but it's making a lot of us nervous because of the effect it could have on the economy. And again, if Rand Paul is right, and it does cause this, it could eventually lead to recession. Well, once you go to recession, then, or the GDP numbers go down to lead to that recession, then that's going to be become an emotional response, where facts and figures and what deals may be reached won't matter, because the recession will go on, and people will feel that. They hear the R word, and that's where they're going to be heading, and everybody's going to be nervous. And in that case, all bets are off the table. It doesn't matter what kind of things are done to improve. Everybody is trying to cover themselves in a recessionary period. And the fear will take over and swallow up everything. And that's a concern for me as well. With all of this, is where it's going. It's a delicate balancing act that the Trump administration has to play. The boldness could come back to bite us. We'll see how it all plays out. But the benefits that we've received from the tax cuts could go away if this continues for any amount of time. We'll see what happens. I would tell all of us to hold tight. And it's also one of the major reasons why we hold precious metals for times like this, when things go south or sour in the economy. Keep in mind, most people believe we're overdue for a recession anyways, so it's always a good time to hold gold and silver. Here's one other reminder to keep in mind. Just because we have a recession does not mean that gold and silver are going to go up right away either. It may take some time. You look back at previous recessions, especially the last one, it did take a little time before gold and silver went up. And I believe that most of that was somewhat artificial for those metals. I think they were overpriced during the 2011 time period. Post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, share, comment, and subscribe.